Hi everybody, it's Rachel checking in with your Real Estate Roundtable conversation. Thanks so much for tuning back in with us, and I'm super excited today. So our guest is going to be Abe Amiri with NRL Mortgage, and he is a loan officer that I work very closely with, and I'm super excited to have him here. So say hello to the people, Abe.
Hey everybody.
Tell everybody about yourself and what you do in the real estate industry.
Oh yeah, so to give you guys a quick little background of what I do, I'm a loan officer here in Cincinnati, Ohio. I've been doing this for about 2 years now. So I started in a little bit of weird time right when COVID happened.
Sometimes.
Yeah, right. Didn't know what the industry was going to look like or what was going to happen in general. So yeah, I started right around COVID, and it took me a while to get, everything rolling. I had to, get licensed and all that fun jazz. So I've been doing this for a little bit over 2 years now. I started as a LOA, and now I'm my own individual loan officer.
So that's a loan officer
assistant.
Okay,
Yes,
yeah. There's a lot of acronyms, I feel like, in real estate, and it's like, wait a minute, run it back. Okay, loan officer assistant, and now you're a loan officer.
Yeah.
Drop the A.
Yes, exactly right, yeah. Drop the A, ironically. But yeah, so I started off as a LOA, helping a colleague of mine. He goes by the name Michael Wilson. It was such a blessing to be working under him. I learned so much in a little bit of time, and I think it was a really good start to my career being an LOA, because it allowed me to work under someone that had a big book of business, and work really deep into files and just learn inside and out how to work how to do a loan. So
absolutely. Well, that's awesome. And so tell us how you even got into lending, and tell us about yourself, because I know Abe because we chat.
Yes,
but you have an interesting backstory too.
Yeah.
So tell us about that.
Okay.
Where you're from.
So I'm originally from the Bay Area.
Gang.
Yeah.
I'm not from there, but I support you.
Yes. So I was grew up there, born and raised, lived there my whole life. I moved to Cincinnati about going on 4 years. It'll be 4 years in May.
Wow.
Yeah, I know time flies. Yeah. So I moved here. My wife is from the area, so moved here.
Stuck in Ohio. It's either like a job or love.
That's
it. Job, love, or family.
Exactly. So for me it was love.
Yeah.
But
now you're stuck forever.
And I love the area. I mean,
Yeah.
Cincinnati's a beautiful, beautiful area.
Yeah.
I mean,
we have a beautiful view, which is
right?
incredible.
It's amazing.
Let's talk about that. That's beautiful. You work in a beautiful
Yes,
office.
I mean, we are very fortunate here
Yeah.
at NRL. Our office is wonderful, as you can see. I mean, we have the view of the Ohio River. And then on this side, you can see the city.
Yeah, it's beautiful, y'all. We have like panoramic windows that go all the way around.
Yeah.
I say we, like I work here.
I told you, you're more than welcome to
I'm
come whenever you want. Let's make it a habit, right?
For real.
So moved here and got into the lending business. My good friend Michael Wilson, as I was the LOA for, he got me into the business. Nice. So the market's ever changing, from going from 2 years ago to where we're at now is just a complete 180, and it's just exciting and nerve-wracking to see where we're gonna go.
It's a lot of change, and it's a lot of unknown that we have to have, and it's just like trying to move and navigate, but in the unknown. So it's really difficult. Also, I want to touch on your family background, because I think it's incredibly interesting, and that's kind of where we connected.
Yes.
So tell us about growing up in Oakland for you.
Yeah, so growing up in the Bay Area, it was very diverse, to say the least. I mean, we have very, very diverse cultural background in the Bay Area just alone. Backgrounds from all over the world. Me personally, I am half Mexican and half Afghan, as I told you. So
I called him he's like the Kamala Harris.
Right. Of loans. Yeah. Kamala Harris of loans. So no, not really. But so growing up, I'm a first generation. Nice. So both my parents come from their countries and background, and growing up, it was just very culture, I would say, very culture infused upbringing.
Rich.
Very culture rich, I would say.
I know the food is incredible.
Yes. Oh my God. Yeah, I was very fortunate to have very authentic food. Whether it was the Mexican cuisine or the Afghan cuisine, I was very, very fortunate. So, Yeah, right. I know. We're talking about earlier. I gotta learn to make my cultural dishes, because
whenever you want to cook.
I got you.
Do a few tests. Testing on everybody else, and then
make sure it's good. I got you.
So we worked together for a few months, and I'm super excited. Like, I love our partnership.
Yes.
And so I think the biggest goal here is educating people on the home buying process, because it can feel very daunting and very overwhelming, especially when you see everything kind of moving at its pace in real estate right now.
Mm-hmm.
I think it's kind of hard for people to kind of jump in and,
Right.
need to be educated. So
Right.
we kind of want to walk through different steps of the process. So
Mhm.
kind of the first thing that we do is pre-approval.
Yes.
Is what, me as a realtor, pre-approval, and even for you as a loan officer in this market is, houses are on the market for 2 days. And if you don't have a pre-approval letter, then it doesn't make a lot of sense to go see houses. So
Yeah.
can you touch on kind of how you can get started in the pre-approval?
Yeah, so what I like to tell all our clients is, start the process early,
Yeah.
because obviously buying a home is a long process, and it's a good idea to start early, because you want to get all your finances in order. I know a lot of people are like, I'll put it off till next year. I'll put it off to next year. But by the time next year, you're already going to be a year behind. So it's really important to start early. That way you can
start like a year in
yeah,
advance.
year in advance, 6 months in advance. In advance. But it really helps to start early, because that way you have a really good idea of what you can afford, what your down payment's going to be, and what your closing cost is going to be. So the pre-approval process with me typically is, you fill out that application, right? I analyze all your financial data. The main things that we look at is credit, assets, and income.
Okay.
So, credits will determine what kind of interest rate you will qualify, what type of loan program you'll qualify for. So, it's really important.
Credit is important.
Very important, and that's why I say start early, so that way if your credit needs a little bit of help, I can also help with that. So a lot of loan officers, can help you with your credit if you need a little bit of, guidance on what to do. So.
Absolutely.
Yeah, so credit, and then, obviously assets. Assets are, what do you have as far as, what do you have in your checking and savings account? What do you have as far as, liquid assets or in your stock account, whatever
Okay.
the case may be. Because,
Absolutely.
assets is where we determine how much you can put down as far as down payment.
Sure, absolutely.
And-
I do want to run you back to the credit, because I think credit is such a system that is really hard to navigate.
Yes.
And it's possibly by design, you know what I
Mhm.
mean? Like, it's hard, and so there's
Mhm.
so many factors that kind of go into credit, and
Mhm.
we spoke about people that need to build their credit.
Mhm.
So
Mhm.
can you give your kind of a range of kind of credit that you think should be good, and then ways that you can
Yeah.
improve your credit to get
Yeah.
where you need to be?
So obviously the higher the number, the better,
Right.
right?
Right.
But a good starting point is 650 is
650.
kind of where we would ideally want you at,
Okay.
because then you could qualify for FHA and conventional as well at 650. But we'll go into a little bit more detail on each loan product. But yeah, 650 is a good starting.
Okay.
It's a good starting point. So-
And ways that and I've kind of touched on this too, but things to reiterate, if you do have a lower credit score, what are definitely some things that you can do
Right.
to increase it so that you
Right.
can get to that 650
Right.
ideal range?
So, definitely having trade lines.
Okay.
It really helps you as far as having credit cards and having low utilization.
Okay.
Yes, so those
Usually
are
they say 30%
Yes,
below of
exactly.
credit utilization, so you don't want to max out all your credit cards.
exactly,
You wanna keep it pretty low.
exactly.
Okay.
So as long as you do that and do that consistently, that's the most effective
Sure.
way to raise your credit.
Listen, my Chase Sapphire is like, girl. And so imagine too, and another solution is, okay, if you do have one credit card and it's 50% utilized, do you open another credit card? Do you pay it off?
Yes.
Or kind of increase
Yes,
that?
so I would recommend just work on the one
Sure.
and get that to that 30% utilization, and then once you're able to maintain that, yes, definitely open up another one and just make sure that you stay on top of your payments.
Yeah, and also too, you don't want to open up a lot of cards because
Yes.
it goes credit seeking and that
Yes.
can be negative.
Yes,
impacting your
exactly,
score as
yes.
well. It's a whole finesse, the credit system. But
Right.
just a quick touch on that.
Right, yes. And then that's what it helps to reach out to a professional. That way you can help
Absolutely.
and guide you in the right
You
way.
can monitor it as
Yeah.
well. So we talked about credit, assets, and then what was the third one?
Income.
Okay.
Yes, so
Okay.
debt to income ratio is really important when you're
Sure.
buying a home. So we look at how much you make as far as income, and look at all your debts, and then we can come up with this ratio. And when that ratio, depending on what kind of loan product you're with, will determine on what loan product you qualify for, and give you a little quick insight on that. Conventional loans have a lower DTI than FHA, so you would want to have under 50% if you're gonna be going conventional, and then if you want to go FHA, your max will be around 55. So
Okay.
yeah, FHA allows a little bit more wiggle room and flexibility.
Perfect. That's a perfect transition. Thanks for that.
Yeah.
So let's talk about, and we can talk about it from both lenses, on the lending side and the real estate side, because conventional and FHA, I think in this moment are very, they're the main loan products, and I think for buyers it's really difficult, and we need to make sure that they educate themselves on what is what. So speaking from a real estate perspective, well, you can go into it. Conventional and FHA, we talked about some of the guidelines.
Yes.
But in this market, unfortunately, FHA buyers are having a really tough time. And I think it's because so many different regulations. For example, like if you're a flip, or if you have the house is on sale that's been a flip, FHA buyers can apply for the first within the first 90 days.
Yes.
So that automatically is okay.
Yes.
You can't take that. And with appraisals, FHA appraisals have to be fixed because it is for people that may not have the cash to make repairs in a home.
Right.
So they want to make sure it's safe and secure.
Exactly.
That's another kind of FHA trait, I guess. Well, I'll say characteristic. And then on the loan side, do you have any kind of advice for FHA versus conventional, and how to navigate that?
Yeah. So you nailed it on the head when you said the 90-day flip broker. That's one of those big things. A lot of homes around this area and stuff, people buy them and they want to make a flip. So with FHA, you have to wait 90 days till you're able to do a FHA financing on that specific property. So yeah, that's why it gets a little bit of bad rep when you want to go FHA, because they're just a little bit more stricter when it comes to guidelines, because it is a government-backed loan. So
and they want to protect borrowers.
Exactly, you want to protect the borrowers because the government's backing these loans. So they want to make sure that the property is no funny things going on with the 90-day flip rule, and then also with all the guidelines like no chipping paint, and everything has to be handrails. Everything has to be really up to code when it comes to FHA financing. So I guess that's why, in a sense, they have a bad rep, or people look down on it because of they're just a little bit stricter with the guidelines. And then and then conventional loan is basically backed by Freddie Mac and Fannie Mae, and
they're Fannie Mac and Freddie Mac is something we kind of talk about, but just to touch on it, they're like companies that are contract government.
Yes, yeah, exactly. So they back the loans. So
but
Fannie
they're
Mae,
corporations that just work with the government.
and they make exactly, and they make they have their own guidelines when it comes to it. So Freddie Mac and Fannie Mae they're two different entities, and they have their own guidelines when it comes to lending, and they're a little bit similar, but they could be different also. So typically we always look at both options, when it comes to the borrower, because one borrower might work with going Freddie Mac, and then one borrower might be qualified with going with Fannie Mae.
There's so many acronyms: Fannie Mae, Freddie Mac, Big Mac, Fannie Mae. Let's do anything. It's so many things.
Well, that's why we're here to help them,
I
right?
think that's the point.
Yeah.
And so too, we talked about kind of FHA conventional and any other like loan products that NRL offers in this moment.
Yeah. So we have a whole toolbox of loans and loan products that we can offer. We have all the standard loan products, FHA, conventional, VA, USDA. Let's see what else we got. We have I-10 loan products as well, which are for people that don't have a social security number, which is a taxpayer ID number. We can also help them with financing. So not to go too deep into it.
I know. And that's the thing. I definitely want to I'm like, we can cambiamos, because Abe and I both speak Spanish fluently, and that's like an incredible thing, and that's kind of where I like our partnership was rooted in.
Yes.
Among other things. I just love this. But, you want to switch to Spanish? Cambiamos a la español.
Sí, claro que sí. Sí, claro.
Y solo puede explicar un poco de la ITIN. Y ese proceso por las personas que no tienen una...
Sí, claro que sí. So, el proceso para ellos es... sí podemos ayudar a los gentes con ITN, pero es un poco más difícil, tú sabes. Van a necesitar al mínimo casi a 15 a 25% para down payment. En efectivo. So, sí hay chances de ayudar a gente con ITN, pero tú sabes que no es tan fácil, pero...
no es imposible.
No es imposible.
Es un poco difícil porque no tienen una numeración posibilidad y
Sí.
yo entiendo, hay problemitas con pero es una posibilidad para
Sí.
las personas que no tienen antes.
Ajá, claro que sí. So, I mean, todavía hay chance de ayudar a la gente así. So,
Okay,
yeah.
perfecto. Pues cambiamos a inglés. O sea,
Yeah.
back to English.
It was a funny story, brother. I was like, I would have never thought you spoke Spanish.
I know,
It's still amazing.
should.
Still
We
amazing
should.
to me.
And the funny thing is, I've been working with Spanish-speaking clients, and my favorite thing, and I'm like, I need to have like candid camera for this because I was like speaking with clients over the phone, and they're like, okay, come meet me in the office, and I pull up, and they're like, it's just like sheer faces of confusion. But it's my favorite reaction.
That's awesome.
Yeah, definitely.
That's
my
awesome.
travels have really like been able to help me with that, and I'm happy to continue to use that in real estate and help people.
Let's
really
get
need
it.
help.
Let's get
Come
it.
on, let's get it.
I know. We're gonna have our home buying seminar in Spanish.
Yes, we're
here
gonna
soon.
manifest that.
Yeah.
We're gonna make
Yes.
it happen.
Yes.
We're gonna make it happen. Thank you for that.
No, thank you.
And then also too, we touched on you guys do a bank statement loan product
Yes.
as well. Can you touch on that very
Yeah.
quickly?
So bank statement and loan products basically, if you don't have any not conventional or sorry. You don't have if you don't have the conventional income doc. So there's products out there that can help you, which is a bank statement loan. Basically looks at if you're self-employed, have your own business. We instead of looking at a traditional tax return or anything like that, we'll look at how much money your business is bringing in monthly, and we can determine that by looking at bank statements and looking at transactions in there. So yeah, I mean, there's a plethora of loan products out there for so many people.
Yeah.
I mean, there's literally one for everyone. So it's like I'm starting to even learn that myself as I get more experience. Talking with people and talking to clients. It's like once you talk to them and figure out what they actually need, there's a loan product out there for everybody.
And that's the thing that I really appreciate about NRL, because they look at all sources
Yes.
and bring in all loans from across the board.
Yes.
So you get a lot of different opinions than rather going with a bank.
Right.
So let's touch on, so we got people pre-approved, now we got the approval letter, or the pre-approval letter, I should say. And then you call your realtor. And then you take, the process of seeing houses.
Yeah.
I don't want buyers to feel, I mean, in this moment, there's like 50 buyers for every one house. So it can feel really discouraging in the process of shopping. But call your realtor, they schedule things. Once you're under contract, you go through inspection. And then if we can start touching on the lending side, once you're under contract. Once you're under contract.
Yeah, so once you're under contract, as you mentioned, typically we'll wait till the inspection is done to order the appraisal. I guess that's the next biggest piece.
Can you explain what an appraisal is too?
Yes, of course. Yeah. So appraisal is basically determines the value of the house, and lenders, we won't lend on a house that's not worth more than it is. So if you buy a house for, let's just say, $300, purchase price, and it comes in under appraisal, that's when you're a little bit trouble because
that's always like you're holding your breath until you're
right, exactly. So because then the lender won't lend more than what the house is worth. So then that's when you have to probably go back to the negotiating table and then go that aspect. So the appraisal determines the value of the house, and it's important that we order appraisal after inspections because if anything comes up during inspections, that's at that. Exactly. That's at that point. It's you want to fix those items before we order the appraisal.
And that's definitely things to kind of like touch base on too with your realtor in the process. Is so many people are overbidding. People are going 30, 40, 50K over asking, and the house might not necessarily appraise at that value. And so that's why it's really important to pull comps to make sure that you're pulling kind of like a range and estimate on the appraisal, because you don't want to be in that situation where a house appraises $25,000 under and everybody's scrambling it's like it can be definitely a hurdle. So that's awesome. So once we get through the appraisal process, and then what kind of documents are you asking for?
So typically what I do is I like to be really thorough up front. Even at my pre-approval process, I want to collect all docs up front because it just makes the whole process go by smoother. That way we're not, trying to collect income docs or anything last minute. So, with me, it's basically we want all our documents before we go under contract. And then that way, once we're under contract, we're not really waiting on any documents as far as the borrower, unless something comes up and underwriter needs something else. We're pretty straightforward after that. Inspections, then we order the appraisal, and then by that time the file files already moving along in our system, going from processing to underwriting. We typically want the file into underwriting within, 24 to 48 hours after getting our contract.
Okay.
So that way, that way it's in there. And then the typical process is we go through initial underwrite first, right? So the initial underwrite basically is the underwriter will read the file and say, hey, the file's conditionally approved from here, and that's what we want to hear. We want to hear great, conditionally approved, and typically they're really small minor conditions, which is based off the condition of the appraisal comes back, based off the condition that the title comes back. And those are the bigger conditions, and unless we're missing any other kind of like docs at that point. And then after the conditional approval, then we wait for the appraisal, title work, and once all that stuff is back, then we submit it back for clear to close. And then
that's
boom.
The best. You're like, I got clear to close.
Yes.
You usually you'll get a clear to close, which is like a final kind of approval. You'll get it about 3 days before you close.
Let's say like a week, hopefully.
Hopefully.
But there's sometimes that does go to the wire. But so you could, definitely want to clear to close ahead of time, so that way everyone's at ease.
Because even too, I think being professional, just like we can get too close to the finish line, but sometimes stuff doesn't go through, and I think that's it can be very stressful. That's why you don't count your coins until after they're in your account.
There's so many variables when it comes down to it. That's what I've learned, through doing this for 2 years now. It's like some of the variables you can't control, but that's why we have to be really thorough what we do, because we want to make sure that we can at least control what we can, and then other stuff, if it happens, it happens. But
and that's the thing, you do the best you can for your clients. So,
right.
And two, I kind of want to touch on, so we get closing, clear to close, everybody's happy, you go to closing table, you sign 1 million documents. If you're the buyer, you sign 1 million one. If you're the seller, you sign like 15.
It's always fun.
And then you get your keys and everybody's happy. So I definitely want to touch into also the kind of macro view of real estate, kind of talking about trends and kind of what's going on, because it's definitely a historic market.
Yes.
So can you touch on kind of what's going on?
Yeah. So we've had an interesting couple shifts.
Months.
Shifts between what happened with COVID and then now. So as everybody knows, what happened with COVID, right? COVID hit, interest rates dropped historically
It was
low.
like what, 2, 3?
Yeah, I mean, you were getting anywhere between 2.5% to 3.5%.
Basically free money.
It's crazy how spoiled people were for 2 years. So and that makes sense of what happened to the market. It became such a exactly. It's such an influx of buyers because there's a lot more buying power at the time. Interest rates were low, so a lot more buyers can qualify and get more bang for your buck. Absolutely. So what it kind of did, and what I think it did, change it into seller's market, because that way the sellers were able to dictate what they could list the house for. So that's what we saw a lot of home prices driving up in the last 2 years. So and then start of 2022, interest rates started climbing up a little bit.
They started at about like 3.5
in
January.
Yep.
And what are they around in April?
And then now we're anywhere around 6% already. So and all depending on credit score too. And to piggyback so credit score helps you dictate on what kind of interest rate you're gonna get. The better your credit score is, the lower the interest rate you get offered.
They trust you with more money.
Exactly. You have a good track record of paying your bills on time. So interest rate dictated off your credit score, and then so right now we're seeing anywhere between 6% and up, depending on I know it's so what's gonna happen. I mean, with the higher interest rate, I feel like it's gonna maybe level out the playing field. Cool it down.
But the buying power is also reduced. So if you were paying 3% interest, 3.5%, your buying power at 6%, you're paying a lot more interest for less money. So your buying power can go down, and that's kind of what I think the goal of the government is, to cool it off, because there's too many buyers in the market that it's becoming, it's very difficult.
I don't know. My insight is maybe it's gonna turn into back to a buyer's market now. So we'll see where it goes, right?
And two, I think the combination of higher interest rates, high cost of rent. Rent prices are super increasing, and so it's a conversation now of okay, why am I paying $1,400 for a one bedroom when I can get a whole house for the same cost? So I think that is shifting, it being a seller's market, and just, you know, the different generations that are now at
Right.
play.
I like how you mentioned that because,
Yeah.
I mean,
Millennials are buying houses.
right, yeah, we're the next generation to start actually buying
and
homes.
we're competing with everybody else that's already in the market, and then you have to consider Gen Z is right on our tails. You know, they're turning like 25 soon. Like,
yeah,
you know,
it's interesting to see where the market's gonna go, right?
And that's kind of the unknown that we have to kind of navigate constantly.
Right,
In real estate.
right.
You can project all you want,
Well,
but like,
yeah,
you know, every day is something different because they even
the
talked
market
about,
always shifts, right?
right, and they talked about that the interest rates were going to be at 6 by the end of this
Oh,
year,
wow.
and we're
We're
already at 6
here,
in
yeah.
April. So it's constant flexibility and things
Right.
like that. So,
Right.
do you have any advice for people looking to buy, tips, anything like that, to make people a stronger, more educated buyer in this market?
Yeah, reach out to a professional like you and me.
Call us. That's
Yeah,
what
call
I'm
us.
saying.
Yeah. No, but you know, really just, you know, reach out to a professional and start the process, you know, in conversations early. That way you're prepared and you know what to expect, what you need to have saved, you know, so things like that. I mean, that's really the biggest piece I can give. I mean, you know, save money, try not to buy a new car.
Don't buy, oh my gosh, please do not buy a new car if you're under contract.
Yeah, well, yeah, if you're under contract, for sure,
that's
but
an extra tip.
if you can hold off and not buying a car, if you're going to try to buy a home in the next couple of years, it will literally kill a lot of your purchasing power. Your buying power, because, I mean, that's a big debt to have, you know, so I highly suggest, if you can avoid buying a new car, don't buy a new one. Don't do it. It's the worst. Yeah. Ride a bike. Well, like in California, everyone's riding bikes.
Ohio, we don't do that. We're working on it.
Yeah, so
but
I mean,
definitely preparing and making yourself educated in this market is huge. Tell us where to find you, where to connect with you. Yeah,
I mean, you can follow me on Instagram, Abraham.Amiri at NRL Mortgage. Oh, actually, no, I changed it. It's Amiri Loans now. At Amiri Loans. Yeah, you can always
That's your Instagram?
Yeah.
Okay.
Yeah, you could always reach out to me on Instagram via text, call, email, whatever. I try to be available always for everybody. I mean, you know, real estate agents, you guys work always.
Listen, I call Abe all the time. I'll be like,
I mean, it's funny, but we don't have any set hours, right? It's like whenever someone needs help, whenever you can answer the phone. So,
boundaries are a thing. After like 9 o'clock, I'm like, I don't need you.
Right.
I'm sorry. It's
9 o'clock's pretty late.
I mean, in the winter, that's difficult. But it'd be like 5 o'clock. But
I mean, you know, like we're always available to take everyone's call.
Absolutely. I'm thankful. Thank you so much for being a part of my roundtable.
No.
Abe's an incredible loan officer. Hit him up if you even have any questions just to prepare yourself.
No, I just want to say thank you for having me. It's been such a blast.
It's been so fun working with him too. He's such a great person. He has
Likewise.
great energy. So,
thank you. Thank you. I know I can't wait for the future.
Absolutely smash it.
You already know.
Thank you so much.
No, thank you.
And thank you all for tuning in, and we will see you next time.